You wanted to give just a real quick update on Bitcoin. I feel like right now we are at a pretty critical point in the charts. So what I wanted to do is I wanted to look a little bit at the history of Bitcoin and look and see compared to where we are currently right now. I've got a couple indicators on here. I'm not going to really go into those right now. Really just wanted to just kind of get into the meat and potatoes of where we're currently sitting. I've got a chart over on the left, which goes from November 2016 to March 2017. And then on the right, I've got November 2017 through basically today. And I was comparing the charts, and they ended up being pretty similar. Of course, we saw, in 2016 to 2017, we saw a pretty decent bull run, and then, of course, in January, we saw a bear market, and that went, basically through the middle of January, and then we saw a three-wave impulse. Sorry, a five-wave impulse, and then a little correction, and then basically we saw another massive bull run that took us up to 1339. And basically, I think we're in the middle of that right now. We saw the massive bull run up to 20K, and then we saw our bear market for a while, and we hit the bottom at 5950. Um, we saw another five-wave impulse, and we completed a three-wave correction, and now, of course, we're starting to head back up. Now, this is all speculation at this point because we don't know what's going to happen next. There's a potential possibility it could, start to go down, but at least from the indicators that I'm seeing so far, is we could potentially be moving back up. But what's really interesting is the run from $686 up to 1166 was an increase of about 70%. And then the bear market took it back down to 725, which was a decrease of 38%, a 38% decrease in value. And then what we saw was, another explosion that took it up 85% almost. Now, if we look at what happened in 2017, we saw it went from about $5,400 up to 20,000, which was an increase of 268%, which was actually four times the increase that we saw in 2016. So we saw a decrease of 70% when we went from 20,000 down to 5,950. So that was a 70% decrease, which was twice the decrease that we saw in 2017, in January of 2017. So if we look at this at the same rate of increase, which is potentially 320%, our target here is $25,000. Now, that's assuming that the market basically follows the same patterns that it did back at the beginning of 2017. It could happen. I don't expect this to happen overnight, of course, and I really hope it doesn't happen that quick because what we have found is, the quicker things go up, the quicker things go down. So at the end of the day, I think these next few hours or maybe the next day or two are really going to tell a tale. If we can pass where we currently are, if we can go past 11,800, and really what I'm looking for is for us to go past 12,000. And what I'm really looking at the most is this little area right here where we had some resistance. If we can pass that level over here, then I think we're going to be on target to hit our next mark, which is going to be probably 14,000 to 14,500 before we see another correction down. But I definitely don't see us, and I hope I don't see us go lower than where our last high was in this recent bull run, which is about 11,800. Because if we go below that mark, then we're back in a bear market. What we're expecting to see is this run up to pass this mark, but go up enough that when we retrace, it doesn't go below this point. Because in order for this to be a true Elliott wave, point 4 can't go below point 1. So we need to make sure that this level is able to stay above this level here. and that will sort of validate for me that we're still in a bull market and that things are going to continue to go up. So I promised you all I would keep this short and sweet. So I hope this helped you out. Leave some notes for me if there's anything that any comments that you have or what you might think. Have a good night, good day, wherever you are in the world.